Good morning. Morning. Let's get the charts up here. There we go. So we have a breakout for the S&Ps anyway within a range-bound market. There's the possibility to go up to the top of the pivot high, of course, now that it's started this move. You got this unemployment report out now, and I guess the market really has nothing more to go on as far as news-wise. The rally overnight started on the U.S. and China speaking nice. From last week was new tariffs and bad talk brought the markets down a bit, and now some positive talk, and now the dismal unemployment report, and the market is up a bit here within this range. So we've got a lot of stocks that are doing well, others not so well, of course, but that's always the case day to day. And so, as we always do, we'll see where things go. Less dismal than expected. Well, how wonderful is that? Probably the worst is yet to come. But maybe this market is just waiting for the news of most states opening up. I don't know. It's still a stock picker's market. Things kind of grinding within this upward move against a longer term downtrend. The S&Ps here, basically going nowhere for 4 weeks. We'll see where this ends at the end of the day. If it ends up here, that certainly would suggest if it can take out that prior week's high, it could continue to go higher. We'll have to see where it ends up today. Buyers want to continue to step up here and get prices to, move up to the next area. And so we've got this little range going on here, pre-market. And so these are our levels initially here. It's 2,900, and if you can get above 29 and a quarter-ish, I suppose. So, this was the momentum move. It pulled back, it pivoted, which created a support reference point, and buyers stepped up again. And while it was whippy over here, they stepped up on that little shallow pullback, and now we'll just see if they can take it higher. The NQs, doing better. Peekaboo above the swing high there. And it was the pullback. And historically, the greater than 100% retracement, meaning it started the move at support and it took out resistance, is where the momentum stalls. And so stalling here pre-market really doesn't mean much. The question is same as the S&Ps, whether it can clear this high or whether it moves down, anywhere, somewhere around here, I guess, 90, 80, maybe a little above, give or take. But still a lot of running in place overall. A lot of chop. I mean, yesterday was the same. The only thing, I guess, to some extent missing yesterday was the end of day sell-off that started and then whipsawed and went back up again. So, and we'll see how this shapes up today. Up almost 300, but big deal, And I mentioned during the week, you look at a minder, whether it's what the markets are doing or down here, what individual stocks are doing. And then you look at the chart and you say, is something of significance happening? And in reality, nothing. Still, here's the swing low and here's the swing high, and things are going sideways, and it's a lot of nothing. So I like the fact that there was this red bar ignored. Next resistance isn't that far off. It continues to be an intraday trader's game for the most part. Individual stocks have done, and certain ones have done tremendously well, and a lot of them, a lot of nothing. So, ideally, when the markets are out of a range, you have more stocks that are continuing to go higher. And just as I'm thinking, I'm not just wondering, breadth we looked at yesterday pulled back to the 0 line I mentioned. That's typically where markets try and push up again when it's going sideways within the this higher upper level. It typically pulls back towards 0, where the buying will start to resume. So should this continue to go higher, we'd look for sentiment to push up toward here. And historically, when we get the two of them aligned is when markets tend to have bigger corrections. Now, this correction has been a 3 to 4 week correction sideways. So same story. We'll just see how this shapes up at the end of the day. Russell starting to move up here. It's move. One sec, guys. Okay. Not the ideal pattern, but I like the fact that we got a topping tail that went nowhere. We got a red bar that went nowhere. We've got a move down that reversed back up again, and it's pushing higher. So it's encouraging, at least intraday, trading the futures here, that they could make a move potentially of some significance intraday, and even up to that resistance area, which would be an awesome trading opportunity intraday. And you would think that the downside is limited at this point since it's created the support. But if it breaks here, if it does break below, since it's retesting the high, that would be a negative, and we'd get some downside action. And I might look to trade that as well. But it's a smaller opportunity than taking out the high and pushing up here. Right? So let's take a look. It's Friday, and it's a crazy chart for the spiders, gaps and dojis and all over the place. 291 hit 292, obviously still in the range. So SPX spreads, well, I'd like above the swing high here and below 2,800. I don't know if that is going to show up any premium, but for me, that would be the ideal, that prices that they would not get above the swing high today, and ideally would hold 2,800 on the downside. So we'll see what that looks like. Oil chopping around, bonds down a bit, obviously move a bit in the opposite direction, but just range bound as well. There's the sell-off on the news, but a lot of going nowhere for quite a while. And gold just kind of waiting in the wings for some information here, and just consolidating over several weeks now. At the beginning of that resistance area, still bullish, upward move, but at resistance. So things are obviously slowing down, but not dropping. So I say it's still bullish, but range bound. So other than intraday, if you're long, worth holding on. Stops below this level. Expectation is that it continues to move up, since we've got multiple time frames in uptrends. Yeah, and that's kind of short here for me because nothing much is really happening in the indices. And, it's been that way for a while. And transports, we don't really get much information pre-market, but, I see what Norwegian was up a little bit. I don't know what the airlines are doing here. UAL's up 3.5%. So that is a good sign. It's not up very well, almost 3% for American. So maybe, if we can get the transports above yesterday's high, the market should rally, and with an upward, well, the transports won't get up to this area, but at least, a little short-term move, if it can clear these highs again, up toward 2960-ish up there, right? Yeah, so I looked at SPX, Paul, and it was rather quick, but, if we can get premium above this swing high and below 2,800, we'll see which way things go here. pre-market, just continuing, with the futures. If it breaks below here, the upside should be safe, even above 2960-ish, a bit above there. And, on the downside, 28, under 28.25, nothing below 28.25. Figures, as the ranges are contracting, volatility is coming in, those juicy premiums are going away. So it is what it is. Those are the levels, on the downside. And, if it can clear here, well, maybe, 28 below 28.60 is the way to go. Not ideal, but, I think that is the best we're probably going to get. I don't know if there's any premium at 28.40, give it a little extra, but if we can get above here, the next stop should be at 29.60. Well, the market, yeah, I would prefer selling a put spread if it can get above this level. That should be the easy pickings, down below here. Since this consolidation over a few days has produced no downside price action, it's not as if this is breaking out through here where it's a no-brainer, but clearly the buyers have been stepping up on the dips, even though intraday there's been some nasty sell-offs, right? We've seen them and we've taken advantage of a few. And so getting above here gets bulls, raising the confidence. And, look, it's just black and white. You look to the left, it clears here. The assumption is it goes higher. It's consolidating. So if it can clear here, yeah, we look for the put spread. 28.40, I think it's as best we're going to get, So if it comes down below 2,900, down 28.80-ish or so, well, up here should be a no-brainer. Yeah, 29.70, absolutely. But let's see if it can break lower first. I think those are what should be relatively safe levels. This is I don't know the analogy, getting in the cage with a tiger, because these things move, as better than everyone, Paul. You do these all the time, and so they can have some wild jiggles intraday, but they're an eroding, or as Dan says, a melting ice cube as the day goes on. And
yeah, but you watched that Netflix show on the Lion Man, so you're experienced.
I did watch it. It was interesting, Dan. That guy was a little too wild for me.
Like cool Tiger King, right? That's Greg's new name, Clint. Tiger King. I like it.
Did you watch that show, Dan?
Yeah.
Okay, so he had some quirky things going on there.
Oh yeah.
Yeah. So anyway, see what's going on there with trades and gappers here.
I think we just got a new name for Mr. Capper. I like it. All right, let's take a look at, we got a ton of earnings again, but let me go through opens here real quick, because, my analogy, I don't want to go looking for new inventory if I got any inventory on fire that I need to manage. Weekly options trader, we only have 5. McDonald's, a call spread. Don't like the gap up. We got our stop in place. So, well, actually, we converted to a condor yesterday, meaning we sold an out of the money put spread when it was getting too strong. And that's an adjustment strategy we teach, so that if we do stop out of the call side, the put side gain will help offset it. Penn, Barrett gave us a nice heads up on this yesterday. We sold a put spread. Space, We sold a put spread that looks great. W whiskey, we have a call spread that expires today. And the mere fact that it's opening relatively flat, down a few pennies, we're going to get great, volatility in time decay just by the mere fact of holding it overnight. Microsoft, I told you all to close out a put spread in here, and then I got an email from somebody. I forgot to send that to our Telegram people. So I put it back in open positions and we'll manage it. Microsoft put spread. That is it on weekly. Let's take a look at a swing letter now. AAL, we have what's called a covered put. We're short stock, short. That's not true. We have a bear put debit spread. So that's a mildly bearish option directional trade. Crowd, we're long stock and we legged it to a covered call. We sold the 77s yesterday for 70 cents to increase our probability of profit. Echo Bravo. We bought this little breakout yesterday at $10.05. Hasbro. We legged into a covered put. So this one we are short stock and short out of the money put. So we'll just manage it. Love another bear put debit spread directional. McDonald's covered put. Space long stock. TMOS long stock. That was just a fantastic gapper yesterday. Shock pattern, gap breakout, no tail, bullish 15. So we bought stock on the afternoon gap out. I can't talk. Afternoon breakout right here. Just a no-brainer setup. That fantastic. And that's what trading's all about. You take the seminars, you got your trading plan, you know what you're looking for. There it is. You calculate share size and you hit the mouse. I mean, that was beautiful. And remember in the green trading room, we had a very long discussion about whether or not we should leg into a covered call. And I said, I'm the nut behind the keyboard. And I said, no, it looks higher. It's an igniting bar. Let's wait till momentum slows. It's still in an uptrend on the 15. Visa, we're long stock and legged into a covered call on the afternoon sell-off. We sold an out of the money call to lower the cost basis. Finally, whiskey. Nothing to do with the distillery sector. We're long stock. All right. Steve, I mean, overnight risk with these gaps is there's risks on anything overnight. No way around it. And that's why the green room is awesome for day trading. HLF, nice gap up, 41.50. It's bullish, but it's too big. BCO is not a gapper, but I just threw it here to remind us that is a textbook beautiful bear 1, 2, 3 pattern. If it triggers with a market gap up, then it's totally fine. In fact, it's better. Or from McGraw, more better, because it's a bearish pattern, relative weakness, it triggered, and you hit the mouse. APPN for a nasty gap, 48.50. I have this as a bear call credits. There's there's actually, I find more bearish gaps today than bullish ones because things have been extended. 0 DTE day. So not only will we be focusing on Spider and SPX as we do the other expiration days, but we want to focus on equities, and the earnings are what I like the best because they're high volatility. So let's keep an eye on this. McGraw, you're going to be busy today. You're going to have to delay your little plantation work. All right. So that, again, call spread. Save, yeah, under yesterday's low is a short. PVAC 724, bullish gap. That's worth watching. So, my quick two-step process. Bullish gap with a price void, met. Step two, put them in a window, a little thumbnail, and let's see how he sets up. So I'm putting some things in windows here, thumbnails, PVAC. Let's continue. So what I'm doing here is quickly reviewing the gaps and telling you all which ones I'm considering tier one, which means I need the most attention at the market open. $10 here, that's a bullish gap. You know, this kind of looks like a Corona stock, but it's a bullish gap. You know, you can tell, folks. See all the daily bars and real bodies and opens and closes. I can tell that a gap to $10 here on an hourly chart is over a lot of resistance. So that's a bullish gap right there. HMSY gapping up. If it is gapping to 30, then yes, but I only see one print there, so I just dismiss that for now. And you know, Jason, if something's really going to be a shock, you know, pattern with confidence, I want to see a tradable pattern pre-market. Why? For obvious reasons, because you have a pattern and there's a lot of commitment in that pattern pre-market. All right, so let's continue here. I'm trying to go fast because there's so many of them. OUT, it's junk. You know, I'm also, my job here is to delete a bunch of stuff. This was a beautiful bearish pattern. Now it's gapping up only to yesterday's high, which is fine. So if this takes out the low of these two bars, that's a beautiful short. Keep that on the list. I like that one. C is gapping down, another beat up, you know, travel, entertainment stock in the Corona world. It's junk. Switch is all over the place pre-market. I got better stuff to look at. Hey, remember, Jason, it was you. We had a discussion yesterday. You were wanting, or you or somebody wanted to take a directional option trade on this. And I said, well, that ain't a pattern where I would do it. And let's just say it opens up here, wherever it's trading, you know, 30 cents. If you did an option trade with the volatility crush at the open, even though it's up 30, 40, 50 cents, trust me, that will be a losing trade. When you make these option ones, you need bigger moves than the market's expecting to pay for those expensive options. Junk, you're gone. Unit up a little bit, but you're junk. Car 1710. It's recent IPO. I don't know what it does, but it's sloppy. Up 960. Bottoming pattern. I like the pre-market. Well, let's keep an eye on that. 1040. I don't like the way it came down hard. ABR. There you go. Another bottoming. That's worth watching. 30-minute high. I like this. That ain't bad. You see how I'm just pruning my rose garden here? So this one's up, opening flat, stamp. There's nothing to do there. Yeah, Emmanuel, we looked at those. Yeah, airlines are bouncing a little bit, and I noticed the cruise lines are also. And AAL, it's still junk. It's still in a junk downtrend. It's against us. Yeah, there, you know, nothing you can do about that in swing trading. McDonald's. Like I said, we have an Iron Condor and also a covered put. You know, we always do objective trade review, and the setup was fantastic. Breakout failure, breakdown, and you know, it's just bobbling around here. SPWR. 844, it's a big gap, but this is a put spread candidate. McGraw, I hope you're taking notes. 39, gapping down, no pattern. Yeah, Roku's on my list for a call spread candidate. Now this is one where if we did take a bullish earnings option trade, we would have lost. That was a very bullish close. Gap down, 1, 2, 3, 4, closing breakout. That was a bullish close. So if one of you asked me, hey, Dan, can we do a bull call debit spread? I would say, go through the checklist, let's see what we're paying, make sure they're tight. And I would say, yeah, pattern supports it. Well, all earnings are speculation, and that one didn't work. So it's a shock pattern. It's gapping under this bull green bar. So that is definitely on my bear call credit spread. Here's another one, big old shock pattern. I sent out a text to our weekly options traders folks with a couple of these bear gaps. This was on the list. Look at that. Remember I said yesterday that this one also looked good if you wanted to take a directional? But do you remember I also said, what if this were to open up at 26 bucks tomorrow? And look at it, 26.29. How many of you thought that was a stupid question? Not the traders who have been trading a long time, like a lot of us. Anything can happen. That could have opened to 18 bucks. Who the heck knows? But that's a bearish gap. So I'm going to be all over that for shorting a call spread also. Hey, Jake, what I think is more unbelievable, I said it to Greg pre-market, and I've been saying it the last few days to you all. Now, I know market's up on record unemployment. That doesn't surprise me as much because of the discounting. It was still better than expected, whatever. Everybody knew it was horrendous. So why is it a shock? But what shocks me to this day, and I'll never get over it, the NASDAQ is positive for the year. Can anybody explain that to me? We are, we're in a recession. We have the worst unemployment. Businesses, bankruptcy attorneys are getting, I know, it's I know, but I mean, we can talk about it more. But I know it's the fiscal and monetary stimulus, but I just have a hard time seeing that. I mean, companies have to make money. So I don't get it. We can have a talk about it later. Okay, Fed cash. These companies' profits are down. Now, sure, there's a certain number of tech people and you get concentration on the FANGs, and I understand all that. And some companies are going to do better in a recession, when the weaker ones go out, some are going to go better. I get all that. The forward-looking, Dave, I get all that. But to be positive on the day, this is like, do you all know what an Aegis cruiser is? Our most powerful destroyer. And I view this as a friggin' atomic bomb put a hole in the bow of your Aegis cruiser. And it's just like cruising around saying, it's okay, well, it's business as usual. Let's keep cruising this thing with a big old hole in the bow. It's crazy. I don't get it. All right, so I've given us a few tier ones. I still got some more gappers to go through, but let's focus on the tier ones first. Oh, Callan, I finally can't. Look at it. I canceled it the other day. That was a 1, 2, 3 from last weekend. But yeah, it looks better now, definitely. Yes, it does.